first happens. So let's talk about those insurance terms you need to know. Brandy, of course, you've heard of copays and deductibles.
Yes, of course.
And then co-insurance and out-of-pocket limits.
Yeah, I have, and I know what they mean because I buy my own insurance, but the first time around, I definitely didn't know, and it's still kind of confusing.
Yeah, they really are confusing. We get questions about those all the time. So we actually created a video that groups these terms into 3 buckets just to sort of give you a way to think about them. That way they're a little easier to understand. So let's go ahead and show that video right now.
3 pillars of a health insurance plan. When you sign up for health insurance, it's helpful to know what you're buying and what you'll have to pay for. When you pay your monthly premiums, the first benefit you'll get is negotiated rate. Your insurance company negotiates reduced prices for you that typically lower your initial bill from 20 to 50% according to bills.com. You also receive preventative care screenings. All major medical plans must provide certain recommended preventative care screenings for free. Things like dietary counseling for weight loss and tobacco and alcohol counseling are covered at no out-of-pocket cost. Out-of-pocket maximum. Your health insurance plan also has a cap on your out-of-pocket costs for covered services, which is $6,750 or less in 2015 for individuals. With many health insurance plans, you'll also have copays. What's a copay? A copay is a flat rate you'll pay for a specific service. For example, in 2011, the American Medical Association found that the average cost of a doctor's visit was $104. If your health insurance plan includes a $25 copay to see a doctor, your insurance company would pay the remaining $79. Some plans have copays that can be applied when you visit the doctor, a specialist, or pick up prescription drugs at the pharmacy. Most individual health plans also have cost sharing for covered services in the form of deductibles and coinsurance. What's a deductible? A deductible is the amount of money that you must pay before the insurance company will start to pay your medical bills. Coinsurance. Many plans have coinsurance, which is a cost-sharing requirement you're responsible for once your deductible has been met. It's usually a percentage of the negotiated total cost of your medical expenses. The insurance company pays the remaining percentage until you reach your plan's out-of-pocket maximum.
Yeah, the trickiest part for me is still the cost sharing. I mean, the video explains it, but it's still kind of tough to grasp.
Yeah, I know cost sharing is so complicated. So it takes a while because it's a new concept for a lot of people. So we're just used to the deductible with auto insurance, and that, you know, once you pay that, you're done. So we actually thought coinsurance needed an example to make it tangible, and we created a second video that uses an example of a $50,000 medical bill just to show how the cost sharing pieces work together.
How does health insurance work? Here's an example of how insurance cost sharing works. Let's assume you have a health plan with a $1,000 deductible, 20% coinsurance, and a $6,000 out-of-pocket maximum. Deductible. If you incur a $50,000 medical bill, you will first need to pay your $1,000 deductible. That will leave you with $5,000 in cost sharing left before you reach your plan's $6,000 out-of-pocket maximum. Coinsurance. With 20% coinsurance, you would pay $1,000 for every $4,000 paid by your insurance company. That means for the next $25,000 in covered medical expenses, you would pay $5,000 and your insurer would pay $20,000. Out-of-pocket maximum. Once you've paid your $1,000 deductible and $5,000 in coinsurance, you've reached your $6,000 out-of-pocket maximum. Altogether, with this $50,000 medical bill, you will have paid $6,000 and your insurer will have paid the remaining $44,000.
What I like about this video is that it shows even with a $6,000 out-of-pocket limit, which is a lot of money, the health insurance paid $44,000 of that $50,000 bill.
Yeah, I agree. It's a good real-world example. So in the videos, you cover the terms, what they are, and how they work together in the plan. The part that would concern me is the maximum out-of-pocket limit. $6,750 is a lot of money. Yeah. What do you say to people about that?
Yeah, it is a big number. So there's a couple of things you should know. First, most plans have an out-of-pocket maximum below that amount. That's the maximum, but it's not that high on most plans. Second, it's important for people with subsidies to know that that number can change if you have a low enough income.
Yeah, it's a good point, and I think we're going to show some video of our website. You should know that if your income falls below about $29,000 a year for a single person or $60,000 a year for a family of 4, if you enroll in a silver health plan, and you benefit from some additional cost sharing. That's easy for me to say. So again, I think we're going to show this video to give you an example. If you qualified based on income for some of these cost sharing reductions, that would lower your deductible. It could also lower your co-pays and your out-of-pocket. And when you're shopping, you'll just see those things sort of lined out. Again, you have to enroll in a silver plan. Every plan is a little different in the way these reductions are implemented, but basically if you qualify for these additional reductions in your out-of-pocket costs, we're just going to show it to you when you're shopping. And I don't know how that will work if you buy somewhere else, but I know at eHealth we just cross it out. So just to wrap this section up, our hope is that after watching this you understand sort of what you're getting for a monthly premium, and then how the co-pays and cost sharing work within a plan. And then finally, if you're concerned about the out-of-pocket costs, you know how to find that in a plan so you know what your risk, your maximum exposure is, and you know how to figure out if you might qualify for some additional reductions.